Today on the show, I have the pleasure of welcoming back one of my guests that I had on this podcast way back in episode 56, which means it would probably have been back in 2017. I'm speaking with none other than the Cashflow Ninja himself, Mr. MC Laubscher. Now, for all of those people out there who haven't listened to episode 56, I really encourage you to go and do so. But I'll give you a bit of a background on MC, and he can dive into it when I welcome him on the show. But MC is the creator of the top-rated podcast for business and investing on iTunes, also called the Cashflow Ninja. That's why he got his name. And he's the president and chief wealth investment strategist at Producers Wealth, a wealth creation and advisory firm. I know he's been kicking some massive goals in the last 18 months, and I'm really excited to have him back on the show. But enough out of me. Let's get him out here. G'day, MC. Welcome back to the show. How you doing today, mate?
Doing fantastic, Reed. Thank you so much for having me back on. Great to connect, mate.
Mate, it has been great to connect. And a little bit in the green room before we hit record here, we were talking a lot about what you've been up to. Do you want to give the listeners who probably have listened to that episode 56, but just what have you been up to in the last 18 months, mate? Because I know you've added a few to your tribe.
We're definitely a growing family. So we've got a young baby boy that's 20 months now already. It's just crazy how time flies. And we just welcomed our baby daughter in December of last year, mid-December. So she's almost 6 weeks old. So we're definitely a growing family. And it's a lot of fun. Not a lot of sleep, but a lot of memories and a lot of fun, right?
Yeah, well, I personally don't know anything about kids because I've got a dog and that's hard enough, right? But you were saying earlier in the piece, when we're talking offline, just how you've had to prioritize stuff. You know, when you're planning stuff out, you know, you're very much a go-getter and a doer. And okay, by this date, I'm going to have it done. But now you've added kids to the mix. How's that changed your goal achievement and your view on how you achieve your goals?
Yeah, it's been very humbling for me because I usually, have certain targets and I'm pretty ruthless going after it, right? So I get up and go after it. And the one thing that, having kids and having a growing family has definitely taught me is, obviously blocking time better. I mean, I'm getting up earlier and I'm going to bed a little bit later. But yeah, you really have to plan everything down to the minute. And also you have to accept that when you set certain parameters and timeframes to achieve your goals in, you have to be flexible because you still want to deliver quality work. And then if you don't have enough sleep or you're a little bit tired, you're not firing on all cylinders, it's okay. It's right. Okay to say, I'm going to do this at a different time when I'm more focused, I'm more energized. My mind is much more clearer, so I have a lot of more clarity and I can work much better. So it's definitely been a humbling experience, but it's a great lesson. It's a great life lesson. You continue to learn, you continue to make adjustments. So it's been one of the gifts of many that these children have given me.
It's a really interesting point that when we touched on it briefly, I've spoken a little bit about it on this show, and we all, as entrepreneurs, struggle with this. Like, we're sitting in our own cinema. Like we view our life 24 hours a day, 7 days a week. And we're always trying to do more. And I'm very guilty of I call it putting too many pots on the stove, right? Mm-hmm. And it's boiling, and because you think you got to get it. Yeah, I'll do this extra thing, and that's but back to what you're saying, the quality can't be compromised. And I think when you keep in mind targets versus goals, like a goal has a time frame attached to it, where a target is like, I want to produce a really well produced podcast, or I want to get to 1,000 units, or I want to have X amount of dollars under management. And someone always said to me, is like, does it really matter? And particularly with kids, you've got kids, when you're speaking to your grandkids when you're 80 years old, whether in my case, whether I had 2,000 units in 2018 or 2022, does it really matter to them? As long as you've had a good life. And the answer is it doesn't matter, right? Like it's all about perspective and trying to take away that time. You still want your targets, you still want your goals, but understanding that having that mental clarity and that calmness to be, I'm okay with allowing myself just sit this or let it take a little longer than what I maybe had done it in the past. And it sounds like you're experiencing it firsthand, mate.
Yeah. And your scorecard changes too, right, like you just mentioned, right? So that's essentially what happens because you want this whole thing and this whole journey that we're on. And one of the big things is freedom.
Right.
and time freedom more specifically, right? So you don't want to let your health go. You don't want to let your relationship, especially with your wife, go, and your children, and all of the other things. And then your business is only part of it. So yeah, I mean, obviously we're very driven, and many of your guests are very driven, and we're going after it. And we have big dreams and big goals, but it's also great to have everything very well balanced, because I truly believe, I mean, if executed properly, you can hit the goals in all these different areas. You can have phenomenal health. You could have a great relationship with your spouse, right? You can have great relationships with your kids. You can have a great business and businesses, and you can have great relationships with friends and still enjoy all the other different things. So yeah, I mean, you and also have a great spiritual life, right?
Right.
Your connection spiritually. So yeah, you could still do all of these things. It's just it's interesting how they all develop, right?
Right.
And how it all ties in. It's part of learning. It's part of the journey.
Well, it's also part of just being an entrepreneur as well. Like you say, so many people, and I'm guilty of it as well. I'm sure you've been guilty of it when you're in your younger days, when business may have taken over health or relationships or, relationships with family or whatever. And and going back to personally, I've spoken a lot about on this show, like I have regrets of certain things that's happened in my life, and, but now you've got to reprioritize. And there's a difference between priorities and goals, as I've said before, making sure you're prioritizing your health and prioritizing sleep, and really health comes first for me. Then as you said, your relationships, and I've got one in there called love, which is kind of like your spirituality, treating people correctly. And I can't treat people correctly if I don't have enough sleep, because I get grumpy, right? And then the last one is business, and you have to be successful across all platforms, because you can't just be, I'm really successful at business, but I've got a shitty life. My wife's dumped me, and I'm cheating on my wife, or whatever that might be. You got to be across all of it. And I think it's really important that sometimes with kids or with new responsibilities like you've got, your mind changes a little bit to make sure you're equally distributing yourself across, the 4 different priorities that you have in your life. Any comment on that?
Yeah, and it's a great time to have this conversation, because it's the beginning of the year, right? So everybody's got New Year's resolutions and different goals and targets and so forth. So it's very important to track them too and review. And I love those different categories that you have. So it's great to sit and reflect weekly, or even do it daily as you're journaling, right? Mm-hmm. Am I growing in all those areas? Because I mean, that's the goal right there, is to grow in all the different areas that are important to you, not just one.
Yeah, exactly. Mate, I want to get into sort of the meat and potatoes of today's show, but one question I have before we do is, we were speaking offline, you've just rebranded. You were Valhalla Wealth. You're now Producers Wealth. Walk us through, the listeners through what you do besides your podcast, but what you do on a day-to-day basis outside of podcasting.
Yeah. So I think it was at the beginning of 2018, we rebranded from Valhalla Wealth to Producers Wealth, which was a great exercise in itself, to getting very, very clear on who we are serving and who are we out there to produce value for. So producers, I include entrepreneurs, investors, business owners, and then also busy professionals. They're the producers that we talk to, and they're the audience and the target of our clientele, the majority of our clients. So yeah, what we do is we help them create wealth outside of Wall Street. We do that through many different vehicles and many different strategies, but it's an alternative where we use insurance vehicles and alternative investments. Most of the investments that your listeners are familiar with: multifamily, mobile home parks, self-storage, assisted living facilities, a lot of different syndications, also life settlements as part of the package of the insurance stuff. And then we also basically bring it all together in a strategy for them based on the infinite banking concept. So yeah, so that's what we do. We have a lot of fun providing as much value for those folks. We learn a lot from our clients as much as we teach. So it's been a phenomenal experience. It's been great. When you do rebrand things a little bit and you change up marketing, you never know. I mean, anybody that told you that they figured it out, they're lying. They haven't figured it out. You just try and figure things out on a daily basis, and and try different things and see what works.
So how do you come up, because you bring up a really good point there about your marketing and rebranding, because a lot of people go through it. And one thing you just said, you had to get really clear on, I guess, and I wrote down here, mission statement. I guess that was what you had to get clear on, right? Like Valhalla Wealth. It's a really weird, when I first interviewed you, I was like, I couldn't even pronounce it. How did you, and now you've gone to Producer's Wealth. It's so much more, it's so simple. So maybe walk through that transition, because that's kind of interesting to the business owners listening to hear. When you do rebrand, how do you get your message across, and how do you be really laser focused on that mission statement in order to put it across your marketing, put it across your, maybe a couple of phrases? Do you have any, is your mission statement changed compared to what you were at Valhalla Wealth?
No, I mean, our mission is still the same. Our target has changed a little bit. What I will say is this, I think, and here's a very important lesson that I've learned too, is for business owners too, is you can be passionate about things, right? You could be very passionate about certain things and the values and the brand and all that stuff. But are you purpose driven within that, right? Is the why strong enough? Because I think there's a lot of people that start with projects and businesses, and they're very excited, they're very passionate, they're interested in it. It might have been a hobby before it became a business, but there wasn't really any purpose and mission to it. So we really do believe in our mission, and that is to help these producers create their wealth outside of Wall Street in any economy and in any market. And we have a strategy that does that. So, and we're trying to help as many producers as we can out there. I mean, on a daily basis, I see the hurt that's going on there. We're a little bit unconventional too. I kind of jokingly say, there's a Seinfeld episode where George walks in and sits down with Jerry, and he says to Jerry, my life is the opposite of everything that I wanted to do in my life, right? So every decision based upon now, I should have done the opposite of what I did, right?
Right.
So the whole episode was based on this opposite theme. And so I think we kind of fit in there. We're the folks that is the complete opposite of what a lot of folks in the financial services and advisors tell people to do. And we're geared towards investors and business owners because we understand them. We are them. We practice what we preach. That's another thing as well. So we do our own thing ourselves. So yeah, back to the opposite. So we're a little bit unconventional. So you have to brand position you in a certain way to attract people that would resonate with the opposite. And entrepreneurs, business owners, they're usually the folks that do the opposite thing than most people in their life, which we targeted them with a message too, saying like, listen, we understand that, we're on a mission here, doing what the 1% is currently doing as far as building, creating, building, and growing their wealth. We'll show you what they're doing. We know you're already doing the opposite of what everyone else is doing by being an entrepreneur, by creating a business, but you're still following the same advice as everyone else. So I think that's kind of been our messaging on that, just sharing that. But yeah, I think a big branding and marketing lesson was that you need to be very, very specific, and the name of your brand needs to speak to your potential client. And I think that was another big change from Valhalla. I just didn't feel that brand necessarily spoke to our potential client. I actually, where it came to me too, Reed, is I was at the 10X Growth Con down in Las Vegas, like Grant Cardone, and I was just thinking to myself, I had like this moment of self-reflection where everybody in the room there, besides trying to create a better life for themselves and 10Xing, as they would say, in many different parts of their life, they were also producers. These are the producers. These are people going out into the marketplace with their businesses, their brands, their products, producing and creating for others. And that's where I kind of said, like, these are my people.
Right.
It's a value that I will try to instill in my children as well, that we are producers. We're not just consumers. Right. We always produce more than what we consume. So yeah, I would say that's, a little bit of the lessons that I had out of that.
That's awesome. And I think it makes you do reflecting. It forces you down a path that maybe helps bring in the fluff or the noise that you may have around your brand. I know particularly with my brand and releasing my new book, I had to get really clear on what do I read Goossens truly hold, to myself. And it ended up being be bold, be brave, and go give life a crack. That was sort of the tagline, because like you, mate, you've moved halfway across the world. I wanted to grab life by the balls. excuse my language, but it's be bold, go out and take it for yourself. Like you're saying, be a producer, go and do, and not just consume, but go to the inherent psyche of what those people would be attracted to your company for, and hence brand it after it, and have all your marketing paraphernalia have all the same sort of messaging to keep attract those people who want to be producers and not just consumers, I think, and think alternatively to the Wall Street investing types, right?
Absolutely. And then of course you can create and build your brand in a certain way that I wouldn't use the word repel, but it's not going to resonate with some people, right? If you go to our website now, Producers Wealth, some folks might say that's a little bit too Ayn Randish, right? a little bit too Atlas Shruggish, and that's fine because that's kind of what we stand for. So if that's not your cup of tea, that's great, fair play. But there are a lot of folks that will resonate with that. So that's another lesson that I learned as well, because I think a lot of business owners want to be liked.
Right. Yes.
And they crave, attention and to be liked. And it's like, listen, not everybody's going to like you. There's a news flash. You might as well get your message out there and position it in a certain way that you attract the right person. And I don't want to use the word repel, but I can't think of a better word right now, quite frankly. Turn off, I guess, the person that wasn't going to do business with you anyway.
But it comes down to your mission statement, right? And your core values. If you don't have those very clear in your branding and your marketing, you can't then attract that right type of person, because people are just like, well, what do you do? The biggest thing I learned with pitching someone is, if you're a doctor, I want to know that you're a doctor within the first 3 or 4 words out of your mouth. I don't want to have to guess 5 minutes into your pitch that you're a doctor.
Yep.
Same with you, when you get your pitch really defined, that 30-second elevator pitch, it's like, my name's Reed Goossens, I'm a real estate investor. Boom. They already know. They don't have to guess. Then I go into how I create value, my mission statement, blah, blah, similar to what I guess you're doing. And I've done some episodes on pitching, but it's very effective around the marketing. I know we're getting a little bit off topic here, but it's a thing that in 2019, I should say, because it's changed the year, your combination with your goals, and maybe people are out there thinking about rebranding and changing the way that they're trying to attract their customers. Anything with I know with, obviously I've started my own podcast. I've got a business on the side that makes a lot of my wealth for me. This podcast doesn't make any money whatsoever, because it's just more of a thought platform. But talked about your Cashflow Ninja podcast and how that has helped you with your marketing and your brand and your messaging, because ultimately that would have opened up a lot of doors, right, to help you with Producers Wealth.
So Cashflow Ninja. So it's 2 separate companies. Cashflow Ninja started too. We talk about ways to create cash flow, right? To the tagline, what is the show about? How to create cash flow in the new economy. Right. We talk about real estate, businesses, commodities, and paper assets. So anything cash flow. So I think right there, the ideal listener to us was also, again, entrepreneurs, business owners, and investors, and people that want to learn alternative ways to, again, Wall Street, of how to create income in this new digital age and digital economy. And it resonated really well with a lot of folks. We went very wide, which generally they say you have to go very narrow.
Yes.
But I think, so it was I tested it. It's almost like, Pat Flynn talks about, will it fly? I tested it. I went wide to get a wider audience with a lot more different people coming into that and listening to that. And then within that wide net, then you can kind of niche down. And people listen to, I think our philosophy. And if our philosophy will resonate with you, then some of the things that we have to offer, people might explore, right? So they get to know you, they get to listen to you, they listen to your philosophy, they listen to some of the principles, because principles and values and core beliefs are universal, whether you're investing in real estate, whether you're starting a business, which real estate is a business, but whether you're going into all these other areas. So I think when you crafted a show where that's what we're trying to communicate constantly in our messaging, is these are investing principles, these are our values, these are our core beliefs, and then on top of that, then becomes the asset class that we discuss with a cash flow ninja for the day to share how they do it, cash flowing gold or using their gold to cash flow it, or trading certain commodities, oil, direct investing in oil and gas, even crypto and blockchain, all of these things. And so I think that was from a branding perspective, and we wanted to make it fun because learning's supposed to be fun. Right. I think that's why we have the ninja. We got the weird sounds. We got the colors for a little bit of pop to get some attention. And then, of course, the martial arts theme comes from my dad, being a pretty famous karateka and famous martial artist, where one of the things that I learned from my dad is to see his pursuit of excellence in his craft daily. Like my dad's 70 years old. He still does a clap push-up. He trains every single day because it's a way of life. He's pursuing excellence in that craft, in that specific martial art. And that really resonated and spoke to me quite, and it still does, because I think that's kind of the journey of wealth creation too, right? And investing. Right. And you look at these top investors and folks at the top of the pyramid, as they say, they're still trying to reinvent themselves and try different things and hone their craft and get better every single day. So that was kind of what the show was, and kind of like the core theme in that. And I think, did we take a risk a little bit of going wider? Yeah, but there's certain things that we were trying to communicate, which is very, very narrow. So not everyone's going to resonate with some of the principles, values, core beliefs, and so forth. So that was kind of the idea behind that.
No, that's awesome, man. It's a little bit different for what the advice I got, because it was niche till it hurts, right? And create your tribe, and your tribe is going to be so, it can be 400 people, right? But 400 people can tell their 400 friends, and it just goes on from there and snowballs. So if you are thinking, if any listeners are thinking about podcasting, I just wanted to talk to you briefly about that, because you do have the sort of the two prongs, right? You've got your marketing, which is the podcast, like I do, and you have the back end business that helps create, the wealth for you and the advice and all that sort of stuff. So with all of that being said, because we've covered a lot of stuff, branding to, setting goals and priorities, we spoke a little bit offline, and being the position that you're in, you probably see a lot of folks out there who are failing at their investing, or in their goal achievement of financial freedom. So what has been the number one thing that you see in your day-to-day, why people are failing right now in 2018, 2019 in terms of achieving their financial goals?
Yeah, we could ramble on about the wrong data, financial education. We could go on about so many different things of why people fail. But there's one thing that's really at the core of everything that I see over and over and over, and that's that they don't have a strategy.
Right.
And, Robert Kiyosaki, best-selling author, Rich Dad, Poor Dad, your listeners are probably very well familiar with him. He talks about it all the time, about that real estate is just an asset. Insurance is just a vehicle. Commodities is commodity. Gold and silver is gold and silver. Oil and gas is oil and gas. All these things are just vehicles. So how is it that, you have a lot of folks just knocking it out of the park, just, eating meat pies, basically ordering meat pies rather. Mess that one up. But why is it that some of the folks are just knocking it out of the park and other people are losing everything, right? Here's a great example. And this is probably within the last, 12, 13 months, but like that whole crypto mania that was going on. This was towards the end of, I think, 2017, maybe.
Yep.
So how is it that there's some people still today looking at buying islands in the Caribbean, and then there's some folks that lost everything? They mortgaged their house. I mean, they completely destroyed them, right? And the whole thing comes down to strategy, because they don't know, first of all, they don't know what they have and why they have it. And they don't know what to do and why they're doing it. That's kind of a strategy. It's like, listen, why are you in real estate? What particular real estate are you in? How are you how are you investing in that in a certain way? And why are you doing that? I don't think anybody asked themselves that question, because I don't think anyone would be in mutual funds in a 401k if they stopped for a second and said, okay, what do I own and why do I own it? That would be the first one. And the second part would be, what am I doing? Do I just hand my money over to someone else? Or am I actually doing something, and why am I doing it? So that would be the first thing. But I think a strategy is like that. That's the centerpiece of everything. Here's another analogy. I love using these. I sometimes butcher them, but I I keep trying.
Same here, mate.
Yeah. So being from South Africa, I'm a horrible golfer, but I love watching golf. And one of my favorite golfers ever is, Retief is great. Ernie. Ernie's one of those guys that he's just, I just love watching Ernie hit a golf ball. Ernie's got a phenomenal swing. They call him the Big Easy because of that nice golf swing that he has. Now, if someone came to me and said, MC, I know you're a horrible golfer, but, give Augusta a crack, would you?
Yeah.
You could either take Ernie's clubs or his swing. Which ones are you going to take? Well, of course, I'm going to take Ernie's swing, right?
Right.
But I think the majority of folks are focusing on the golf clubs. And I think that's the difference between product focused and being strategy focused. And all of the marketing, we just had a conversation about marketing. All of the marketing by media outlets and media that people are consumed is very product focused and not strategy. Buy this mutual fund. Why? I don't know. I mean, it's just, again,
it's good. Trust me, it's good.
It's good. Buy this, flip this house. Why?
Right.
What's the strategy? Where does it fit in? Is wholesaling providing liquidity so I can invest in multifamily and then eventually syndicate and, have my targets with doors and, money under management, all that kind of stuff, right? It's all part of the strategy. There's a bigger picture, right, and everything is connected. And I think sticking to that, the strategy, a holistic strategy, because this is the beginning of the new year, as you just mentioned. We know in health, listen, you have to work out, you have to eat properly, you have to recover and rest and sleep, and you have to hydrate, right? Take care of your body. And everybody probably listening to this is going, well, duh, thank you for that piece of advice. We know it's all connected and tied together, but when it comes to our wealth and wealth creation and our money, we have everything in different buckets. And it's completely not together, which it should be. So you can craft them all together from a strategy, whether it be taxes. Yeah, I can make a lot of money. We consult with clients. They're knocking it out of the park, making a lot of money in their businesses, but they're overpaying so much for taxes. I mean, I'm talking very high 6-7 figures in taxes. So if you, at that stage, if you can reduce your taxes, for example, by 20%, if somebody's paying almost $1 million in taxes, do you think a 20% savings in taxes is going to move the needle for that guy? Absolutely. So it's all connected.
Right. So in terms of strategy, how do you get really clear? How does the average person get very clear on their strategy? Is it looking internally back to what we spoke about earlier, priorities versus goals? Is that because it surely has to tie into that, right? Like, you want to be financially free. What does that mean? How do you, it means I can spend more time with my kids, right? What we're talking about. Or I want to travel the world because I just got back from the Philippines and it was incredible. So how does this strategy tie into play, I guess, a partner to the goals in someone's life when particularly talking about financial freedom, because that's really what we always talk about on the show.
Yeah, absolutely. And we talk about the 4 levels of financial success. And the first part is security. So there's certain things to do to get to financial security. The second part of that is financial and economic independence. And that's when actually your passive income exceeds your living expenses. So if it costs you 10 grand basically for your household to live, then 10 grand is your economic independence number and your financial independence number. On top of that is financial freedom. We usually take the independence number, we times it by 1.5 and we double it. So if using that example of 10 will get you to 30, because now you're still saving money. You've covered that. you've paid off all of your expenses, and you're still investing and growing and looking at different things, right? And then after that, it's financial significance. So that's kind of the scale. That's the first thing to decide. So there's certain things that you need to do to get to security. Then there's certain things that you need to get to financial independence. And then there's certain things to accelerate it to get to financial freedom. And then, I would say from a strategy focused side, before we get a little bit more specific and tactical, one of the things that I do at the beginning of every year is I write down my mental capital times my relationship capital, and that equals my financial capital. So when I look at my mental capital is what I learn, what I know, what I do, my high income skill set, right? And I look at what do I need to do. If you work it backwards and you figure out the financial security, the financial independence, the financial freedom, you have certain numbers, right there of what would get you there, and you can reverse engineer that with your real estate or your business and so forth. Then you bring in mental and capital and relationship capital. It's like, listen, well, what extra skill set do I need to learn to move the needle on that ladder of success? What do I need to read 52 books this year, a book a week, like most CEOs? What do I need to read about? What do I need to study? Who do I need to study? What courses do I need to take? And then the relationship side of it is, who do I need to network with? What masterminds do I need to belong with? What meetups do I need to go to? And I mean, we could go on and on of where people are. That's going to get you eventually to your goals, because those two combined will get you to that financial capital that'll bring you up that ladder. From a strategy perspective is, the mental capital and the relationship capital, obviously our core belief is that you are your number one asset, right? That's our big thing. One of the things that really that we're really battling in the minds and hearts of people in the marketplace is that no one should just take their money and hand it over to a financial advisor and don't know anything of what's going on. They should be actively involved in researching and crafting the strategy that's in. They should have full control. They're their number one asset. Their number one investment is in themselves, relationships, and in their own business. If you're a business owner, here's another thing that I find kind of strange is that people knock it out of the park in their business. And I've seen this firsthand. They absolutely crush it. They're ninjas in their business. And then they take the money that they make in their business that's really driving the needle, and they hand it over to a financial advisor to invest in Wall Street, away from their unique ability, away from their strengths, away from what's driving the needle in their business and what's going to get them closer and quicker to their financial goals. I mentioned control. Alignment and focus is another thing. If your target is, for instance, of investing in a certain amount of private placements in the multifamily space, right? And you've got your target outlined, and you have a passive income number in mind, for instance, to achieve through real estate. Well, are all of your resources and assets aligned to get you to that target? We have folks, I've got a little bit of money here in crypto. I've got a little bit of money here in this. I got money all over the place. What if you align that and push it behind a goal? That's going to move the needle forward. That's what you do in a strategy too. Is there efficiency? Is where your money is saved? Is that efficient? Is your assets positioned efficiently? Is your income efficient? And what I mean by efficiency, the big one that comes to mind, taxes, the biggest wealth destroyer. So your income, Robert Kiyosaki talks about the cash flow quadrant, the E, and the S, the B and the I, the employee, the self-employed, the business owner, and the investor. If you're on the left-hand side of the quadrant, the more efficient income is obviously on the right-hand side. So how do I reposition it? How do I take my income from the one side and get it to the other side? Same with our assets. Is it efficiently? Tax strategy is a big part. I just mentioned one of our clients that was paying a lot in taxes and just reducing it. There's different things that you could bring into your overall plan. Conservation easements, oil and gas, huge tax incentives for those, and some cash flow on the oil and gas side. Protection is paramount, obviously, right? Risk management should be included in a strategy. There's political, there's economical, there's market, there's institutional risk. Dollar maximization is $1 doing many different things, or is $1 just doing one thing? A buck sitting in a savings account is only doing one thing, if any, these days, right? So there's strategies for you to do different things. That's how we kind of blend the insurance with, for instance, real estate, for the same buck to do many different things. And then momentum is a big part of strategy. Now that we have momentum, how do we create more momentum behind it, and how do we compound it? And eventually, how do we collapse time? A strategy should have that too. So those are just some of from a strategic point. I could get a little bit more tactical if you want to with a framework, but those are just a couple of thoughts.
Sorry about that. I was on mute. What I was saying is that it was incredible that what you were saying earlier about trying to get to the first level of independence, and it was just to match your income, your mortgage payments, your kids, your cars, shopping. But then the next step was to get to, I think it was independence. You had to double it, 1.5, then double it, which is kind of a high number. Like it's a big jump between what most people out there think, okay, I want to be financially free. I just need to replace what I'm currently, my mortgage and, the laundry list of stuff I've got to pay for. But you're saying, well, hang on, times it by 1.5 and then double it. Yeah.
So one of the reasons why we did that, and it was something that we kind of put together, but one of the things that we do that is what we've seen from our wealthiest client and some of the wealthiest folks is they save 40 to 50% of their income. So, I mean, I think that's what I've done. I copy and paste a lot of stuff. I see someone that's doing something really, really well. We don't try and reinvent the wheel. We take that and we incorporate it into our strategy, into our model. We see where it fits in, and we position it to make it our own, right? That's one of the things that I saw. And that's why I have it in there for that. Yes, you get to independence. Independence is the goal because, then, you know what? At that stage, could you stop working? Yeah. Especially if it's real estate, because it's going to keep up with inflation, right?
Right.
The rents. But, if you're a producer, again, back to that thing of producing and creating. If you're a producer and a creator, you want to continue doing that and continue to expand, continue to invest, continue to look at things.
My mic is going crazy. You were saying 50% of wealthy people save their money. Is that correct?
Yeah, they save 40 to 50% of their income.
Of their income, Sorry.
Yeah, their income.
And that's just sitting in a bank, right? To then be able is that for a rainy day fund, or what is that for? What you're seeing in your clients?
Yeah. So, what they do is, and again, this ties into where we warehouse our savings, and just something that I copied and pasted too is in the insurance contracts, and then it's leveraged and it's put to work because money needs to keep moving, right? So they're saving that on an annual basis, but it's also deployed into certain areas.
Right.
Whether it be part of their tax strategy, whether it be part of their income strategy or growth, which is in this overall holistic one. So what do I mean by, there's liquidity, there's income, there's growth, and then overall tax components within a strategy. So what do I mean by that? So, reducing taxes, for instance, and W-2 wage earners can do this too, conservation easements and direct investing in oil and gas. That's a very simple way to reduce taxes legally because there's tax incentives for that, right? And a lot of that is available for accredited investors to do already. The liquidity, again, where you said, where do they warehouse their cash? Money has to reside somewhere. So if you have a large sum of money, does it sit in a checking account in the bank? A lot of them put it in insurance contracts, then leverage it to put into their income system, which is, investing in real estate, their businesses and so forth, mobile home parks, self-storage, assisted living facilities and so forth. And then there's growth strategies too. And this is one that the big banks in Wall Street actually do, where they invest in life settlements, which is also an insurance product. So there's different things that you can incorporate within that strategy. But I think those are just different parts because holistically, they all serve a purpose, right? There's tax efficiency of reducing taxes legally. There's efficient warehousing of savings. There's efficient income on the right-hand side of the cash flow quadrant. And then there's growth strategies, which is stuff that's, life settlements, for example, it's out of the stock market. It's not in any market really. The only exposure that you have is currency.
Interesting. No, I think the biggest thing that I'm learning from you right now is that you have literally a smorgasbord of opportunities and advice to give to a lot of people, because I'm sure a lot of people are taking that in just like, wow, that's a fire hose of information, right? And there's just a fire hose of different things that people can be educated on. So, MC, to wrap up the show, because I do want to be respectful of your time, what is the number one piece of advice around a strategy that someone, related to strategy, that someone can go out and do right now in order to be, whether it's more knowledgeable or just be better educated about, again, the fire hose of information that seems that you guys have that produces wealth?
Yeah, I would say just sit some time to think and actually reflect and review, because I don't think anybody does that really. And sometimes I have to slow myself down just to get clarity in my thoughts and plan, because it all starts there. Take a sheet of paper, do that mental capital and relationship capital, figure out what your needs are for your goals with it, for your mental capital, and then also from your relationship. And then from there, you could write down practical goals and targets. Like, I need to read 52 books this year. I need to read a book a week this year on, we covered marketing. Let's just say marketing. I need to get better at marketing, right? Who am I going to study in marketing? You don't have to go further than Russell Brunson, for instance. So look at someone like that. Write all of that down. I would do that from a strategy. And then also review what you currently had and ask yourself the question, what do I have and why do I have it? And then also, what am I doing right now and why am I doing that? And then you'll there'll be more follow-up questions. Well, why am I invested in this particular stock that I've zero control over, but I'm trying to grow my business and invest in real estate?
Right.
So I think those are some practical steps that they can take. And then also another thing that I do as well, I try to do on a monthly basis for my business and also my personal economy, is review for inefficiencies. And we have a tool that we'll be able to share with your listeners as well if they're interested.
Yeah, I'd love to hear it.
Yeah, it's called the Cash Flow Audit Guide. So they could go to yourownbankingsystem.com. There's a webinar, there's a free course, but there's also a guide which they can download. In the guide, it walks you through certain things that you could look at for inefficiencies within your own personal economy and then also within your own business economy. So a lot of our clients have had a lot of success finding inefficiencies, which resulted them into recapturing, hundreds, and in one or two people's example, a couple of $1,000 a month.
Wow.
That they didn't even know really that they were losing and that they were inefficient in.
Yeah, I think that, again, goes back to, there's so many different things you out there that people can do in order to get clear on a strategy. But I think what you said before is sit down and take some time to really review why your whole, like, why am I invested in this particular 401k, or why am I invested in this stock? Does it really resonate with your goal in order to achieve your financial freedom, or whatever that may be? Or maybe it's a tax incentives. You want to save some more in taxes. So really being crystal clear in your goal, aligning that with your strategy. Mate, I want to thank you so much for coming on the show today. I could continue talking to you for another couple of hours, but I do want to be respectful of your time. I want to sort of summarize the show. Can you give me some of your top three investing tips for the listeners in 2019?
Yeah, I think especially in 2019, I think there's going to be a lot of volatility. So I think back to clarity would be number one.
Yep.
Because there's going to be volatility. So you have to know what you're doing and why you're doing it, what you have and why you have it. And then also I would tie into number two is risk management. Understand that there are different risks out there, not just one particular one. I mentioned there's four, right? So political is big one. We all know about economy and markets. We're very well aware. But institutions is also a big one. So in 2008, 2009, if you shorted, for instance, the S&P 500 or the Dow Jones, but your money was with Lehman Brothers or Bear Stearns, guess what? You lost money too. So you did the right thing. You had the right strategy. You were on the money, ready to pop the champagne, but guess what? Your money was in the wrong institution. So That's a big one. So that I would say the clarity, the risk management. And then I would also say that, make this a year about building a strategy around you, something that you want to do. We always kind of mold and we're shaped around different things of what other people are saying, and we take advice from let's just say financial advisors, in this one. But what do you want? What are you interested in? What's important to you? Because everyone is different, right? So build a strategy around your strengths and around yourself and what you're looking to accomplish. So those will be my big three, but be very cautious. Do navigate things properly. Be very clear, manage risk, and build a strategy around what's best for you.
That's awesome, mate. I think you've summarized it really, really well. I want to thank you for jumping on the show today. I know that you provided some incredible, just absolute cracking advice. And just my three pieces of takeaway that I took out of today's show, I think was the financial multiplier, which you were just talking about before, about saving 50% or 40% of your money. The big guys do that. So it's, you've got your financial independent number, and then you've got to get your sort of financial freedom number, which is 1.5 times 2. I also think, we spoke earlier about in the show with its 2019 being very clear on your priorities versus your goals, and then how that ties into your strategy. I think that's really, really important, and some of the big takeaways for me personally, talking to you. Did I leave anything out, mate?
No, that was great. That was a lot of fun.
Well, mate, I want to thank you again for taking some time out of your day, because I know you've got two busy little kids running around. And enjoy the rest of your week, and we'll catch up soon.
Awesome. Thank you so much for having me on, Reed.
Well, there you have another cracking episode jam-packed with some incredible advice from MC Laubscher. If you do want to check out MC's stuff and information, head over to his website at cashflowninja.com. I want to thank you again for taking some time out of your day to tune in, to continue to grow your financial IQ, because that's what we're all about here on this show. And we're going to do this all again next week. So be bold, be brave, and go give life a crack.